Welcome to a new show on the Fitness Business Podcast. We're calling it Industry Current Affairs. And we launched with Kaumil Gajrawala from Credit Suisse. In a report he released in June 2021, it was forecasted that between 2018 and 2024, the wellness economy, including fitness, could grow 7.1% annually, with many subsegments growing quite a bit faster. Over that time, we've had a pandemic, inflation, labour shortages, world leaders turning over, and even the media telling us there's an impending recession. Find out what Kaumil thinks of our industry from an investor's perspective in our first episode of Industry Current Affairs. Before we dive into the nuts and bolts of today's interview, Kaumil, tell everyone what you do at Credit Suisse.
So I'm an equity analyst focusing on the consumer and healthy living space, the halo space, as we like to call it. Healthy, active lifestyle and outdoor. Many people are familiar with the analysts that cover internet or oil that you'll see on CNBC talking about the future price of oil or the future of innovation on the internet. There hasn't been a bank that has somebody that looks at wellness and fitness in that regard, and I'm that person. I'm the first one, hopefully the first of many. But Credit Suisse decided that this is a critically important segment of the market with a notable long-term opportunity, and we should have somebody who focuses more exclusively on the space.
That's a pretty cool space to play in.
Yeah, you get to learn a lot. I'm healthier for it.
Well, from 2016 to 2020, there were 800 mergers and acquisitions, which made this sector, I guess, interesting for investors. And we're now generally way past the pandemic. So what are investors thinking now about this wellness space?
I think what's happened, and it's not just investors, you actually see it from whether it's venture capital, whether it's private equity, but also whether it's strategics. In almost every instance, when companies are deploying in the consumer world are deploying capital, it has some health and wellness angle. So it could be on the fitness side, of course. Peloton went public in that window that you talked about. It could be health and wellness. When Coca-Cola spends money or PepsiCo spends money, it is almost on a functional drink, almost always something health and wellness. Body Armor being the kind of newest example of taking sports drinks in another direction. So we've seen lots of deals. Now, where are investors today? There are a couple of complications that came and went with the pandemic. When the pandemic arrived, of course, it was very much top of mind. Everybody was figuring out what to do. I do think it has permanently changed the consumers around the world to more actively think about their own health and wellness. I think it became more clear that it's not just necessarily a long-term danger if you're unhealthy. There could be short-term dangers as well if you live less fit. And while it might only change on the margin, one thing that has definitely changed is the consumer. More and more consumers are looking for healthier lifestyles. But another thing that's changed is they're not willing to sacrifice to do it like they were before. So to give an example, healthy lifestyle 5 years ago usually meant something restrictive. Do not have carbohydrates, do not have sodium, do not do all of these things, do not have sugar, whatever it is. Today's consumer is looking to consume healthy beverages, is looking for ways to participate in things that will help them be more physically active, but not necessarily something that is boring. They're looking for things to add to their lifestyles, which from a business perspective is great because they're looking to buy things. They are looking for things to purchase to make them healthier, as opposed to the health and wellness customer 5 years ago that was looking to do less of something that was bad for them. And that is a really big change.
That is a massive change and a really interesting observation. So they're happy to spend the money, whereas almost 5 years ago, they were saying, we're going to save some money by extracting things out of our life.
Exactly. So they will, drink less of the drinks that they perceive to be bad for them. Now they're looking to drink more of the things that they perceive to be good for them, which is a major business opportunity across a whole segment, whether it's outdoor, fitness, VMS, vitamins, mineral supplements, obviously nutrition, food and bev. Across all of these segments, it's the same. Where the consumer is going is the same.
Now, you did mention there also the P word, Peloton.
Right.
So we saw Peloton, we saw F45, we saw Exponential all IPO over the last few years. We've seen F45 in the news. We've seen Peloton in the news. Exponential's been pretty quiet.
Yeah,
Were there any other big major kind of wellness companies that floated? And what are your thoughts on those brands?
Not just those that floated, but there was also, if you broaden how we think about the space, you had other companies like grill makers, like a Traeger. You had like a series of things maybe in the outdoor world, even stocks that didn't IPO, but became maybe more of a part of the wellness trend. The Yeti might be an example of them. But many of them are also an example of the way that the pendulum just started to swing wildly around the pandemic. And that became tricky because one can manage stable growth. It's very hard to manage spikes and troughs. And what we had between in real life and at home is a spike and a trough, and the opposite for each. And that becomes a lot more tricky to manage. In fact, one of the hardest things to manage, and I started my career 20 some years ago, I'll round it down, we'll just go with 20, it was a bit longer than that, during the internet boom. And during that time, it was very hard to manage growth. It's hard to say no. And things in many instances that haven't gone according to plan is because the demand signals during the pandemic were not necessarily real run rate signals. They were telling you lots of things that weren't true. So if you were among the first to open up in your neighborhood for a gym or a studio, whatever those initial demand signals were probably inaccurate in terms of what your run rate might be now. The same exactly for the opposite, as you've seen in the news with Peloton. And I'm sure I don't want to bore everybody with exactly what went on there, but the demand signals looked spectacular. They overinvested because of it. The demand, once we came out of the pandemic, wasn't where they thought it would be, but the investments were in place. And then managing growth is often harder. Can often be harder than trying to create demand, more measured demand.
That's a great observation. So now we talk about growth, and the R word has been on everybody's lips recently. And this is our current affairs show. What are your thoughts? You mentioned this last week in the Quickfire 5. What are your thoughts on a recession and what impact that might have on the fitness and wellness industries?
So I think there's a couple of things that can be done about it. In terms of where we are now, the consumer has money. People still have money. They're still spending. There's a million anecdotal stories that I could tell you on where things are turning. And I can give you the pace of the turning. So for example, in the United States, all the way back from the beginning of the Ukrainian-Russian conflict, you started to see consumer sentiment purchases start to move. Things like a restoration hardware and high-end furniture. Not because they didn't have any money, because they didn't feel when the conflict commences, consumer confidence starts to impact how people feel they may not buy high-end couches. Eventually, you see that coming into hard goods at home, like other sorts of furnitures, grills, whatever it is. Now we're seeing it with things like water flossers or coffee brewers. So we're kind of watching that curve of discretionary items start to move. But that also could be because in the year prior, people overbought all of those things that we had. So a lot of these items were also pulled forward. If it was going to take 3 years to work through that inventory, they might have sold all of that in 2020 and some of 2021. Then you started to come around, you're like, oh, okay, things are starting to decline. So it may not be as linked as one would say. But across the consumer categories that would really matter, you're seeing that elasticity is pretty muted as it relates to very, very large price increases, high single digits, low double digits, numbers that nobody would have ever thought would be sustainable and potentially lead to almost catastrophic volume declines. You haven't really seen it. So the consumer right now is okay. And I think it is linked to the fact that there are 3 times more job openings than there are people looking for work, which means if someone is unhappy with what they're earning, they have options to find and get other jobs. Right? There's many different reasons why staffing is difficult, but one of them is the ability to just change your job potentially for more money. And so right now, until we get better balance between the amount of people looking to hire and the amount of people who are looking for work, it'll be hard to feel a real consumer recession. Lots of anecdotal things. But I think when you look at it in the aggregate, so far we're okay, and probably going to be okay until the beginning of 2024.
Is there any daylight on like finding people to work in our clubs?
I don't know, but these things tend to, I don't know in the very near term, but as a general rule, the job market tends to work itself out. You will find eventually there will be a need, and there will be, more people. If inflation continues, by the way, price of food, price of all of these types of things, people are going to need more money, and they're going to be able to go get it. So they will. This is a little bit higher magnitude than we've observed in the past because so many people were out of work, were immediately put out of work. One way to say it is the economies all around the world immediately froze. Immediately everything froze. But you can't immediately unfreeze something. It has to thaw. It has to defrost. We're in that moment right now. And you could just think about, because jobs are one of the most routine things that people do. When people immediately lose their job and then can choose anywhere that they want to go, all routines have been broken. They may not go back to hospitality. They may not go back to fitness. They may not go, in between all of this, Amazon warehouses and Uber contract drivers, and in between all of this, a new industry emerged it grew just at such a phenomenal rate that has started sucking in a lot of the capacity from folks. So yes, eventually it will. I don't know how long it'll take. We estimate it'll probably take till the beginning of 24. It also means, though, that in order to keep up with it, because I think many of your listeners are probably finding that just to get somebody, you have to pay a lot more money than you might have before. You should probably take a price increase, because it is unlikely that these figures come down. The people will become available. The figures may not come down. You should probably take pricing with it. I know because of the worries about a recession, there's a lot of apprehension around it. My best guess is you take the price increase, you figure out what services to add. So it's not just a flat price increase, with the intention that as your members come in, they will be shocked or surprised or delighted by how much value they're receiving for this higher thing. So you don't just take a price increase, you're taking it, but you're also adding some new services. And then they're going to be surprised at how good that stuff is. And I think that'll help us get to this sort of next stage when staffing just starts to equalize, or rebalance is probably a better phrase.
I think you could drop the mic about now and walk out. That's a very powerful insight. I like that you said that the wages, we'd have to pay a bit more, so we should put the prices up because they're not going to come back.
Yeah.
It's the new normal, Kaumil.
Yeah. It's really hard to bring somebody's wage down.
Yeah.
Unless you're in a really difficult position and it's all above board and transparent. It's hard for it to come down. It's harder for it to bring it down.
It's easy if you're the
owner. Nobody
of the
really
business.
wants to.
It's easy when you're the owner of the business to bring your own wage down.
Oh, yeah. That happens sadly faster than I think many of us would prefer.
So tell me, in a report that you released in June 2021, you were forecasting around about a 7.1% growth annually in the wellness economy over a 6-year period. And you even said in that report that there would be some sub-segments that might grow faster. You mentioned that you look at such a broad area of that wellness economy, what sort of sub-segments are you seeing really have that growth and what perhaps are not growing?
Yeah, well, we got two things really wrong in that forecast. One is kind of wellness tourism didn't come back in the speed that we might have expected it to. I think we kind of looked at the shutdowns and looked at reopen and expected it to happen a little more quickly.
What's wellness?
This would be more active tourism, eco retreats, yoga retreats, fitness, which is absolutely booming, had been booming prior and is booming now. But for that first year, we were pretty late in terms of when it actually turned around. That was the first piece. The second piece was connected fitness at home came off a lot faster than we thought it was going to. And we had this very quick rebound in real life gyms and studios, and that's fizzled a little bit itself as well. What I think has really happened here is while we probably have the trend line still accurate, I think it'll still be a high single digit grower, if not a bit better. I think the Global Wellness Institute's closer to 10 now on their newest numbers. I think the peak and the trough ended up being larger than we thought. It peaked a little higher and it troughed a little further when we were lapping it, but I still think we'll be in that zone. Because again, there are more people who care about a healthier lifestyle today than the amount of people who cared in 19. And it was growing in 19. So it's important to remember that 19, 18, 17, or going all the way back to 1984 when Coca-Cola launched Diet Coke. People have cared about this stuff for a long time. How you actually build it out and the degree to which it's been accelerating has continued through. You just had some kind of peaks and troughs going through it.
Is it challenging when you're doing your research to get that middle line because of those peaks and troughs? Because they're very hard to kind of predict, I would have thought.
Yeah, they're hard. That's why we got it wrong. It is hard to do. It is hard to predict. We do a lot of economic works, a lot of TAM analysis. We've kind of all over this stuff, but it's still hard to know kind of the speed at which people have changed. For example, one, I think, very positive outcome, but not something we appreciated, was the degree to which people now want to pay up for experiences. We thought, oh, they're going to go back to restaurants, they're going to go back, but now vacations and all these other things have taken precedence. So they're buying less items for their homes, less furniture, less grills, less fitness equipment, but they're going out a lot more and they're redirecting that spending to vacations and to experiences. And that's a very positive, I think, outcome, but one that ended up being a lot bigger than what we had initially thought.
So it's interesting you talked about those active escapes and those adventure escapes. Do we classify that in the wellness segment?
I think so. There's a couple of views. Wellness can always be very vague and people's definitions can be very different. My general view is anything that helps people live a healthier lifestyle, which can be as basic as just cooking for yourself, right? So if you're doing things that can help you cook at home and eat, we would put that in the space. So certainly ecotourism, certainly someone who's going to look to do a more active vacation than something maybe more sedentary or all the things that people generally do on vacation. The stuff is starting to change. Sometimes the vacations of, I shouldn't say vacations of the past, but the percentage of vacations that were about being almost cheap vacations where you can do anything that you want, eat whatever you want, drink whatever you want, all those sorts of things, whatever the percentage used to be. If that was 100%, maybe now it's 90, maybe now it's 80, where people want to go on a trip and come back feeling great. And that's why you've seen businesses do really well that live in that space. And you have 10-day retreats or 3-day retreats, and you have all these other things, all of which are booming. The reopening was complicated, but now we're in a stage where many of these things are doing really well.
And you said the consumer's got money. So does that mean us as gyms are competing for that dollar with those active escapes? Or is the consumer saying, carving off a little bit of their income every week and saying, okay, I'm investing X dollars in my own health. And this is how I'm going to do it. I'm going to buy a healthy grill, or I'm going to go on a holiday, or I'm going to go in and join a gym.
I think the consumer thinks of the gym more of at-home, ongoing, routine lifestyle. And it's thought of a little bit less discretionary than the decision.
So less discretionary, perhaps, than pre-COVID.
Less discretionary than a vacation,
mm-hmm.
Right? So maybe you want to go on a health and wellness retreat, but you don't have money, so now you're going to go somewhere else, right? Maybe you want to, so I think the decision-making around vacations is a lot more discretionary and influenced by many things, like the price of a flight. It might change your mind completely on where you want to go. I don't think that same sort of decisions are made as it relates to taking a membership at a gym or a club.
It kind of opens a really interesting opportunity, and this was certainly not the route of the interview that I was thinking we would head, but it certainly opens an opportunity for clubs to actually run their own retreats and produce a secondary income. And because you take that community thing that you mentioned earlier, you have that in the gym, and then you can take a group of people on their own retreat, which might only be 100 miles down the road, but it could be something that clubs could look at.
it's a brilliant idea. And it was kind of where I was going with the, hey, don't just take a price increase, start offering something else up. And alternative revenue streams, I think, are critically important. We were at a conference last week, and so many of the conversations were, we're tracking 70% to 19, 80% to 19, 90% to, these are the conversations that I think that's a mistake. I think you need to talk about how you're tracking versus 3 months ago, how you're tracking versus 6 months ago. And what alternative revenue streams are you thinking about? Have you engaged with fitness CPG companies that may want to either sell product or actively advertise inside of your clubs? Do you want to create those types of retreats? The number one, I think it's about 38% of active lifestyle consumers desire to do something outdoors. So what can you do outside of your four walls? That's the new research from ABC Fitness. So do you have something that's outdoor? Are you engaging your community? If you can get that community feel beyond the four walls, beyond just a normal sort of routine working out, there are probably alternative revenue streams that can come with that. And that could also help from a pricing perspective.
Drop the mic number 2. You've done it again.
Thank you.
Other thoughts or what other information have you got about what consumers are looking for wellness? You just mentioned then, the ABC report where people are happy to go outside, they're happy to spend some money. What other thoughts and views do you have on the consumer around wellness?
Well, I think one thing that can't be ignored is that it has to be convenient. It has to be, enjoyable. Or if we were talking about nutrition, it has to taste good. Same thing, enjoyable, taste good, convenient, and then at a price that folks can afford. I think right now the affordability is there. I do think a risk is looking back at 2019 and trying to bring it back. I think you just need to create what the new business should be looking forward. And I think you need to maybe be more open to new ideas in terms of how to bring revenue and services in. Because I think the consumer's looking at all of that a lot more. Omni-channel is overused in the retail world, but omni-fitness is absolutely what's going to happen now, because there are indeed Pelotons in lots of people's homes. And Peloton has changed their model to where they're looking for ways to license out their content. My guess is many of your listeners, 2 years ago, if they called Peloton and said, "Could we get that content?" Peloton wouldn't call them back. I can promise you they'll call you back now. They are open to ideas, and they've shifted their model, from hardware to software. And they're not the only ones. There's other great content that's out there. iFit, I think, has done a fantastic job by focusing on outdoor. So rather than, a studio run, you get to take a run with somebody on the Iberian Peninsula and run through bazaars in Morocco. And so there's a lot more that's available, I think. And with the world changing as quickly as it is, I think there's a lot more companies open to JVs and partnerships and such. And I think that should be considered. It's usually a low cost, low capital way to get into something.
It's a couple of really interesting points there. The first one I would like to go back to is those Peloton bikes in everyone's bedrooms or lounge rooms. And it's not just Peloton, it's all that home gym equipment. You must have seen this huge spike when you analyze spending on home gym equipment, because nobody could buy it anywhere.
Yep.
How long do you reckon they'll still be using that at home for?
Yeah, that's going to be a question of the quality of the content. Right now, we are on the other side of it. Usage is declining pretty notably, probably more than we thought. And it's strange because an extremely high percentage, I don't know the number exactly, but I believe it's higher than 90 of people who own Pelotons love their Peloton. But then you look at the engagement, it's actually started to come off. It could be as simple as the fact that I also cover Clorox. People are using less Clorox wipes, maybe using less Pelotons, because we're on the other side of this now. Yeah. And we just have to deal with what the other side of it looks like for a while. But if the content if they can continue putting out great content, keeping it fresh and fun and re-engage, I have a feeling we're in a lull, but I don't think it's permanent. It will probably come back, especially as they make themselves a lot more available in a broader set of places.
And then that was the second thing you said, which is really interesting, is some of these, let's call them digital brands, perhaps will have to open their doors almost to stay financially viable to the commercial operations like gyms, where we can run a 3 bikes have got Peloton and 3 that might have iFit, and you've got your iFit account. You go you're into the gym, you log in, but you're in the gym doing your iFit workout because you're part of that gym community. I guess that's almost what hybrid might mean these days.
Yeah, it's also a way to get the content without spending $3,000 on a treadmill.
Correct.
And I think iFit has already partnered with Matrix, so some of it is already available. This is not necessarily just something in the future. It's here today.
I have to confess, my iFit account was opened yesterday because I've got an at-home elliptical that's arriving tomorrow.
Excellent.
So I'll be able to tell you what it's like to elliptical around bazaar in Morocco within a week.
Yeah, let me know what you think. Yeah, I mean, I know they have great content if you get their bike, and you can bike all over the world. And if you get their treadmill, you can run all over the world. But I've never really heard of taking an elliptical through a rainforest in Costa Rica, but you can give it a go.
It's going to be fascinating to see. Are there any other trends that you're seeing around that wellness space that we should be aware of?
Well, this community thing that has always been the core of the club, people are searching for that in a bigger way than they ever have because they feel a void. And the best you can embrace that, and it's been synthetically embraced a whole host of different ways, whether it's social media, whether it's the leaderboards, whatever it is. But there is a yearning for community, particularly to do it outside somehow. And I think that's an area where, an area that can be galvanized and turned into real business.
So Kaumil, this is our Fit Biz Operation, and the goal of this is really to give our FBP listeners kind of 3 actions that they should do after listening to the interview today. So what would be your 3 big tips for using all of the research that you've done for them to be able to either acquire more members, keep members longer, or even just keep members?
We talked about it a little bit, which is raise your prices, add new services, particularly those that are going to surprise them, so that as these members come in and see all these new things that you're offering, they see a lot of value in it. Value is much more important than the actual rate, the actual price. So raise the price, but add more value than the price that you've raised. Community, galvanize a community. People want it. They really want it. If you're a club owner, you're already in a very good position to leverage what the consumer is looking for in community.
This has been, I knew exactly what it would be, but it's blown me away because it's fascinating always having a conversation with you, because you're across so many different silos of information that you pull together, and you can articulate it so brilliantly well, sir. That was awesome.
Yeah, my pleasure.
Thanks for joining me for our inaugural Current Affairs episode. And I'd love to know what you think. So drop us an email, info@fitnessbusinesspodcast.com, or go to our website, fitnessbusinesspodcast.com, and just hit the contact button, or send us a message on any of our socials. If you have any suggestions who you think I should interview about industry happenings and current affairs, I'd love to know who you'd love me to chat with. So again, info@fitnessbusinesspodcast.com, or hit us up on socials. Now, you all know our tagline to finish, so let's say it together. What you leave behind is not what is engraved in stone monuments, but woven into the lives of others.